Welcome to the May 9th, 2019 video version of the Wagner Daily. My name is Rick Petticelli, and as usual every Wednesday, this video replaces the written commentary portion of our report, and hopefully the video can offer some insight as to how we look at charts, how we set up our charts, and just offer a change of pace from our normal report. Okay, let's get to the charts. First up is QQQ. Whenever there's a strong uptrend, the break of the 20-day EMA is generally a warning sign that the uptrend may be reversing, losing steam. And that's what we had on Tuesday with the heavy volume break of the 20-day EMA. Confirmation of this break would be for a break of the 5-7 low. It's likely that the uptrend is broken for now and that QQQ will need several weeks of chop and pull back into this 50-day MA at the very least before bottoming out. On the weekly chart, we have a hangman candle last week, and a close beneath the low of this hangman on the weekly chart would further confirm the break of the 20-day EMA, just more evidence that the uptrend has lost momentum. Same goes for the S&P 500. Oh, also forgot to mention, the NASDAQ did rally from lows all the way up to the prior highs without much of a pause. So whenever that happens, generally speaking, there's just not much left in the tank to get an index or any chart through the prior high, as it's used so much energy just to run up to the prior high. So a few weeks of chop here would be ideal to allow the 50 MA to catch up and build some sort of base to allow it to break out from. S&P, pretty much the same chart, not as much of a breakout above range highs, but it stuck its head out a bit and was knocked back down. Also a hangman candle last week. These hangmans are actually hammers, but hammers should come at the lows or after a few bars of pullback action. It should not come at the highs. That's usually a sign of weakness. And again, if there's a close beneath this bar's low, that would confirm the warning signal of the hangman. IWM shown a ton of relative weakness the past few weeks, but it looked like it was trying to come out of its base last week. But both breakout attempts failed with Tuesday's ugly sell-off on heavy volume. For now, it looks as though IWM is back in chop mode, and we'll just have to see if the index can hold above the 50 and 200 AMA. It may need to dip below, maybe undercut this 154.50 swing low here, and then push back up. But we'd like to see it hold above this area right here. On to open positions. Mime reports earnings on 5/13. If it didn't, we'd give this setup plenty of room to break below the 20-day EMA and recover. However, since earnings are on 5/13, we are going with a fairly tight stop beneath 51, as there's just not enough time for the price to recover if it dips beneath this 20-day EMA, as earnings are this coming up Monday. VIAV, we have options here. The options were short term, looking to capitalize on a gap up post earnings. The price has held up well but failed to gap up, so our options, unless VIAV can rally above 14 within the next few days, will likely expire worthless. In Twitter, note that we have new stops. We lowered our stop just a bit below the 20-day EMA, and we actually, the second stop, we raised a bit to just below 36.49. If Twitter can't hold the 20, we want to be out for 4% of the position, and the other 3% will hold for a break of this gap up day low. Coop, stop is in beneath this reversal candle low, which is below the 20-day EMA. If it can't hold, then we're out. Quality breakout should be able to hold the 20-day EMA. If they can't, there's either something wrong with the stock or there's something wrong with the market, and it could be the latter in this case. SMAR, stop is 38.23. We're giving it some wiggle room here still. Needs to clear 43 on volume for us to want to add to the position. So for now, we're just sitting tight. SPLK, pretty easy stop beneath Tuesday's low. If it holds, great. If not, we're out with the smaller than average loss. And SC, we have a stop in place beneath this reversal low here. But the earnings are 5/21, so at some point it's going to have to start moving up, or we're going to have to exit ahead of the report, as we won't have much of a profit buffer, as we are only up 1.5% right now. And the last stock is ZS, which looks pretty good. It's just that it has to punch through 70, and our stop is just beneath this reversal day low here. ZS reports on 5:30, so we have some time to see if it can break through 70 on a pickup in volume. All right, that's it for open positions. In terms of what's out there that we're looking to purchase, there's nothing right now. We went through several charts in Tuesday's report that are bullish, and our main concern right now is that we've already got enough positions on. It's just that they're not following through, so it makes no sense to add on more exposure until some of these names can extend from the breakout point, or unless we're stopped out of these positions and the market goes through some sort of correction, and then we have to put exposure back on if and when conditions improve. And lastly, we're going to cover a few stocks that reported earnings after the close on Wednesday. They were Etsy. Etsy's a pretty bullish consolidation we've been keeping an eye on the past few weeks. Recently tried to break the downtrend line, but it's sitting right at the 50-day MA, which is still rising. But after earnings, you can see here the price is at 63. This is a 15-minute chart, so it closed around 68. So it's about 7% lower, or it closed 7% lower in after-hours trading. And Roku looks like it rallied to 70.40-ish, which is about a 8% gain. SVMK looks like it had a pretty good reaction, up 10%, but gave it all back. After hours trading can be wild, so stocks can fall apart or rally pretty quickly. So back to 1787, which is just above the close. So again, yes, there are some quality chart patterns out there. However, we're not seeing much follow through with current long positions, so it doesn't make a lot of sense to add more exposure. So for now, we're just going to sit tight and see how the current positions hold up, as well as how leading stocks react to further weakness in the market if the market does head lower. All right, that's a wrap for tonight's video. Thank you for joining us, and we'll see you next Wednesday night.